I want to take a look at the big picture on the equity markets. This is something I've consistently come back and looked at over the last few years. It started with our discussion of planet equity in both the 2013 and 14 annual wrap-ups. I believe that we're shifting to an equity model planet-wide, and equity markets are going to continue to grow. This is an integral part of both globalization and becoming a multi-planetary civilization. If you are interested, I would suggest particularly new subscribers go back and check out the annual wrap-up since 2013. In 2013 and 2014, we talked about planet equity and as part of the globalization process, and then focused on space in the annual wrap-up 2015, published in January 2016, and then did the third quarter 2015 on the Chinese stock market. And then in the third quarter 2016 looked very hard at the screening industry. And then, of course, the annual wrap-up for 2016 that we did in January included a lot on what food has meant in the equity markets and why that might be changing. And, of course, each wrap-up has a review of the financial charts for that quarter or year to date. And remember, I also post charts that I track every Sunday on the website. Now, you have to log in to see them, but if you go back through the wrap-ups, there should be an extraordinary amount of information to help you sort of track what we're saying about planet equity and the big picture on the equity markets. To give you an overview, statistically, in 1990, the global equity markets were about 11 trillion. China was $0 of that. The Chinese markets reopened right in 1990, so they were 0% of that 11 trillion. Today, the global equity markets are approximately 70 to 80 trillion. The U.S. being about 27 trillion of that, China now 8 trillion, which is about 10% of the global float. If you look at China's growth since 1990, that is quite remarkable. And of course, if you want to include Hong Kong, you're talking about all of China representing 11 to 12 trillion. And if you look at the growth rate in Asia, both of companies going public in both the subcontinent and East Asia, that's where a lot of the growth is coming. It's really important when you step back and look at the global equity markets to realize that Asia is converging with the G7 in terms of per capita income, but the emerging markets are not. And so there are two stories in the emerging markets. One in Asia, where per capita incomes are growing and are expected to converge with G7, and the rest of the emerging markets where they're not. So that's one of the reasons why the rising Asian consumer is such a powerful primary trend. And if you haven't spent any time in Asia, I really constantly try and encourage people in my network to just get up and go, because you have to see it to understand how dynamic it is.